So I'm investing every single day into the S&P 500 for the next 100 days. And this is the 4-week update, or 20 investing days into this 100 days. So we're 1/5 of the way through. A lot has happened over the last week. So what we're going to do is we're going to take a look at each of the investing days individually. I screen record every single time I invest into the market and just see how it's gone. And then we're going to take a look at the results of this 4th week. And we're also going to compare this to investing this in a lump sum. Let's get into the video. So first of all, we're just going to take a look at the daily screen recordings for my 4th week. Let me just press play. So this week was quite a busy week for the stock market. You can see that it started down. So I think when I opened up the app this day, I invested my £50, but my account was down. I was down £12.35 or 1.6%. And you can see that there's a little bit of a spike, a little bit of a dip as soon as I opened on Monday morning. This week, there was a bit of bad news. I think it was following on from DeepSeek AI, from what I spoke about in last week's video. And as we go into day 2 now, the stock market, or the S&P 500, was still reeling off the back of the DeepSeek AI news, which was pretty bad for big tech. But also this week we had big tech earnings. So Google earnings, Amazon earnings, and Microsoft earnings, and all of these companies have a big impact on the stock market. So they reported good earnings, but they also reported that they were investing a lot of money into AI. And when I say a lot of money, I mean 75 billion, 80 billion, 100 billion. Each of these companies. So you can see that the stock market was up and down this week. Quite a turbulent week for the stock market, which is pretty interesting. And you can see even today, stock market opened down and then it recovered a little bit. And there's me investing at 3:30 in the afternoon. I'm down £4 and it's into Wednesday. So you can see there that I'm seeing that it started low, it went lower, and then it spiked back up a bit. And now we go into Thursday. And actually Thursday was quite a funny day. You can see I scroll down and then I realize, oh, my UK stocks have come in. So I've actually initiated a transfer from free trade, and finally my stocks have been moved over. And you can see here I pause a little bit just to have a look at those positions. But I realized that I'm recording for this video, so I have to carry on and invest the £50. And you can see I'm up £18 or 2.1%. So I think this week was pretty weird in terms of investing, because I invested a few days when it was in the red, and then I'm investing a few days when it's in the green, and up quite a bit. And finding it interesting that this week, in terms of US, it's been quite wild for news, really. Like there was the employment news that came out, inflation news, there was the DeepSeek AI stuff, which stock market was still probably looking at, thinking about this week. And then there was a lot of earnings reports for these big tech companies that the stock market had to deal with. So when we come through to Friday, this is the Friday, it's pretty much flat for me. I'm up like 20p. I invest my final £50 and I'm up £4.23 in total, or 20p on the day. This week hasn't been great. I think I got a few days in where the stock market was actually down. And that's the whole point of this series, is that I'm investing when things are turbulent. This takes me to the end of the week, end of the recordings. Let's go take a look at the week entirety and take a look at the month's performance, and then compare it to investing in a lump sum. So if we now just take a look at my portfolio on Trading 212, you can see that it's at £17,587. Now, if you watched last week's update, you would have noticed that it was sitting at around £12,000. And that is because 5 of my UK stocks that were in free trade have now been transferred over to Trading 212. So if you just wanted to pause the video, you can have a look at which positions have been moved over. I'm still waiting on around about £8,000 in cash to be moved over, but I'm hoping that'll be in the portfolio next week. And then I can use that money to put into the stock market, and I'll probably make another series on what I'm doing with that money. So if we come across to my S&P 500 everyday pie, you can see I'm up £2.33. Since my recording at around 10:30 on Friday, I've lost about £2. So the stock market didn't actually do that well in the last day when I invested the money. So you can see here there was a little bit of a dip towards that end of the day, and then it recovered back up to that £1,002. And you can see this week, when we look at the graph here, that there's quite a few dips. So there's a dip here, there's a dip here, and then there was a big spike here, there's a spike here, and then there's a spike, and then a dip here. So it was quite a turbulent week in terms of where the stock market was at. And I think that's sort of what's going to be happening over this year, in my opinion, is that there's going to be quite a few days where the stock market goes down and then it's rebought up, because retail investors shouldn't be worried about dips in the stock market. And also ETFs are just constantly buying into the stock market without even thinking. And, it's like pensions and all that sort of stuff. It's just constantly buying. I think that the stock market will probably go up this year, but it's going to be a bit of a turbulent year in terms of the fact that there's a lot of news that should be negative against stocks or negative against US companies, the stock market is just going to continue to keep going. If we take a look over the last month, which should be in total, I'm up £2.33 or 0.4% is my rate of return. And if you compare that to the last week, which was minus 0.4%. So in terms of where we were at the end of last week, I've lost £4.48 since my last update. So not good this week. Bit of a rocky week, but I'm hoping that those days where I invested when the stock market dropped or when the S&P 500 dropped, I bought in at better prices than I did at the end of the week. I'm 20.05% through my 5k goal, which is 100 days or £50 per day. I don't have auto invest on. I went through that in my last update video where I talked about how auto invest actually works when you're trying to do it every single day. So you can't actually have an auto invest every single day. And that is why it's off. My balance score is 10 because I don't have any other positions in this pie. And then I have no dividends. So even if I have reinvest on, it doesn't take any effect of the pie itself. And then I have 49 views on this pie, which is quite nice to see. It means that people are clicking on the link in the video, and you can click on the link in the video if you want to see the pie. I'm not actually sure what you see when you click on the link, or whether you see my positions or my amounts in there. I don't think you do. I think you just see that there's one ETF in this pie. And then if we go take a look at the holdings, so I just have one holding, which is the Invesco S&P 500 Accumulative ETF, or SPXP. Over this last year, up 26.33%, or over this last month, up 2.09%. So if we compare this month's performance of 2% to my month's performance of 0.4%, you can see that I'm actually not doing very well in this last month. And if we compare this last week, go back to the pie, it's down 0.79%. And if we compare this week of mine, I'm down 0.4%. So in fact, over this last week, I've outperformed by investing every single day. But over the last month, I have underperformed because I've been investing every single day. Now that we've gone to £1,000, I've now got over one singular share. So I'm at 1.04 shares of this ETF because the ETF costs £962 to buy into. Although you can just buy £10 worth. So, you know, it doesn't really matter. So I think my performance over this last week and compared to this last month highlights the reason for doing this, or the benefits of investing every single day, which is basically if the stock market is coming down or the S&P 500 is coming down or whatever you're investing into is coming down in price, you're expecting that the market is going to take a downturn, but you're confident that it will recover in the long run. Investing every single day is sort of hedging against the fact that you don't know whether it's going to be coming down or going up. And in fact, you're seeing a benefit in investing every single day because when the stock market comes down, you're reaching those down points every single day, as opposed to someone investing up here. They're going to be losing it every single day, but you're investing as you come down, which is called dollar cost averaging, or for UK investors, pound cost averaging, where if the stock market has come down, I'm buying the low point every single day, or I'm buying the market coming down every single day, again, benefiting from not having invested all that money at the start. But obviously, when the market goes up, or when your stock goes up or your ETF goes up, the S&P 500 goes up in price, I'm not going to be getting the most out of that because most of my money isn't invested. It's on the sidelines because I'm only doing £50 per day. I may have outperformed in this last week, but I haven't outperformed in this last month. Now, if we see this week's performance over this next month or this next quarter or this next year, we might see that this strategy does outperform. But I don't expect that to happen if the stock market is going to be up this year. I only think that this strategy is going to work if the stock market comes down. So if the stock market finishes minus 10%, or if the S&P 500 finishes 2025 down 10% or down 8% or down 2%, I think that my £50 per day strategy is going to outperform the market itself. But again, it's just speculation. I don't know what the market is going to be doing. This is just a fun experiment to see if my theory could work, and also to compare it to lump sum investing, but also just to get more money into the stock market or more money into the S&P 500, which is what I want to do. So that is the 4-week update. I have outperformed in the last week, but over this last month, I have underperformed the S&P 500. I do not recommend this strategy, and a lot of the comments that I get don't recommend this strategy. You know, it's not recommended, but it's an experiment, and also it gives you an insight on why it doesn't work. We're going to prove over the next 100 days that it doesn't work. I have an idea of renaming this series 75 Days Hard after that popular like fitness series called 75 Days Hard or 75 hard. But I don't know whether that makes any sense for investing. But I think maybe when we get to 75 days, I'm going to name that video 75 days hard or 75 hard investing style. If you're enjoying the series and you're not subscribed, give us a subscribe, leave a comment down below and tell me what series I should be doing next. I have £8,000 in cash coming into my portfolio very shortly. So I have a lot of money to put into the stock market and I'm going to be doing that all live. Thank you for watching this far into the video. If you enjoyed the video, give the video a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward, then please leave me a comment below and I will give you a reply. Thank you very much.